So some of the bright spots, Diet Coke, Coke Zero, they were doing well, and yet North American case volumes were down, Latin American too. How do you plan on reversing this decline?
Yeah, I mean, the US, I think, softened a little into the fourth quarter, but it was still predominantly driven by our juice business, where we had, based on the pass-through of some of the orange costs, changed some of the packaging sizes. So I think the US business was very much a story about right-sizing the packaging. There's good momentum there, good consumer demand, and I think we'll have a strong year in 2019 in the US. I think Latin America, really the fourth quarter was driven by Argentina, where there was a strong macroeconomic contraction in the fourth quarter in Argentina, and that clearly affected our overall business, and that's going to take some time, we imagine, to pass through in the economy. It'll definitely be there in the first half of this year, and our business will be focused very heavily on affordability of our packaging, changing some of the packaging and the price points to maintain affordability and retain a focus on marketing. So that one will take a little longer to work through. But overall, we got a strong plan for this year.
You've put that message out. Are investors punishing the stock excessively today? It's down a good 7%.
I think, look, we've come out with our guidance. Clearly, currency was starting to affect our results going back to the third quarter of last year, and I think that's starting to be what has weighed on the stock today, with the guidance for 2019 putting all the pieces together, perhaps. But I think 2019, what represents us there is we've got a great operational plan, good organic growth, winning in the marketplace. Some headwinds from currency and interest rates, but there's a long way to go in the year, and we're very focused on managing our business to drive the best result for the shareholders possible.
Now, outside of the United States, let's talk China for a second. How do you plan on growing your business there more strongly?
China, we've had a good year in 2019. It started well in good year in 2018. It started well in 2019. We're very focused on connecting with the consumer with new innovations on Coke, Sprite, some of our juice brands with new flavors, engaging consumers in a much more digital way, whether that's direct to the consumer or through some of the B2B platforms. So we've got a really powerful plan for China this year, and we're very encouraged by the beginning of the year.
Good morning, Mr. Quincey. Guy Johnson in London. US retail sales have just posted their biggest drop in 9 years. Is that consistent with what you see in the United States, or does that number feel like an anomaly?
It feels like what was happening in the fourth quarter, which was a little softer in the US. I think there was a number of things that fed into that, but the back end of last year felt a little softer in the US, so that number doesn't completely surprise. And what we're focused on is continuing to execute our strategy into 2019. We've had a good start to the year in US, so hopefully that is a shorter kind of mini slowdown in the US in the fourth quarter, but we're focused on what we can execute against in 2019.
2018 was a year of incredible volatility for the aluminium price, mainly generated as a result of the Rusal sanctions. Do you think that volatility is now behind you and the prices have come down quite sharply? How will that reflect going into 2019?
I mean, we use aluminium as one of our packaging elements. It's not the biggest part of our packaging portfolio, so clearly stability in the aluminium prices will be important. Obviously, we generally hedge so that we're not exposed that much to the intra-year volatility. But we see aluminium being more stable in 2019. Hopefully, freight, which was a much bigger issue for us in 2018 in the US, will be a little more stable in 19, although we expect to see the cost still increasing in 19. So we see commodities at the moment increasing, but not as much as last year. But it's going to be a long year. There's still some uncertainty and some volatility out there.
Just kind of thinking about what is happening next, one of the big questions is how the integration of Koster is going. Can you update us on that? Is it turning out to be all you'd hoped for?
Yeah, I mean, we've just completed the acquisition a few weeks ago. The team did a great job of bringing in that ahead of schedule. Clearly, what we're in now is in the transition phase. of connecting it to our business, of really being able to sit with the management team and see in depth what their plans are for this year and the coming years, and match that with the synergies and the accelerated growth that we can believe. And so we're in the phase of really making those plans more concrete and going to bring them to life later this year.
Right, and analysts are really looking forward to hearing what that strategy might be. Are you going to take the strategy from Koster and Koster management, or are you going to impose some kind of a vision for Koster, James?
We've got a clear vision for our coffee strategy, and we've talked about it on some of the investor calls. There's the Koster stores, which are part of building the brand, mainly in Europe and the Middle East and Asia Pacific. But they also have a great business, and actually it's the biggest part of the coffee market, which is really coffee within someone else's store, whether it's beans and machines or vending or even mini stores. And I think that's going to be a key part of it, along with obviously some at home and some ready to drink. This is a headline strategy that the Koster management team are very much bought into and in agreement with. And of course, now our objective is to flesh it out and put the acceleration plans into place.
It seems to be obviously the major growth engine for Starbucks, but also a major growth engine for the likes of JAB now and Monster and a lot of other players. Is this where you will be pinning your hopes for the overall Coca-Cola strategy in the next 1 to 2 years? I mean, obviously you're going to tell me that you prioritize every unit, but is coffee where you're really going to put your efforts in the next 12 months?
Well, we're clearly going to put some substantive efforts against coffee, but I think we've got to keep it in proportion to the size of the overall business. We're still going to get a lot of growth, and probably the number one source of growth will be from our sparkling business. It's not just big, it's also growing globally in terms of revenue and volume, and we're very determined in some of the other categories, whether it's the teas, the juices, or even some of the sports drinks and premium waters. We're actually seeing broad-based growth in our portfolio, of which Koster and coffee will be another complement.
Mr. Quincey, staying at home, staying in the UK, let's talk a little bit about what is happening with Brexit. I'm curious, does your production process mean that you don't have to stockpile? I'm kind of curious. March is coming up awfully quickly right now. How does that affect your business?
I think the biggest question to start with is exactly what's going to happen at the end of March. Of course, we're all hoping for as an orderly an outcome as possible, but preparing for the worst. And in terms of our business, look, we have some businesses which are less immediately impacted, but we have chilled juice businesses where we rely on very short shelf line and very fast supply chains, which would be much more disruptive if there was a disorderly outcome to this process. So we've got a lot of contingency plans in place, and of course, like all other businesses, we're waiting to see what the outcome is for the long-term strategic direction of the company, of the country, and the investment environment, and also any impact in the short term as whatever the deal is going to be goes through.
We've talked a little bit about what's been happening in the United States. The Eurozone economy seems to be slowing really quite quickly at the moment. Italy's already in a technical recession. Germany's not far behind, judging by the data that we saw today. What is your sense of what is happening in Europe right now? Is the economy slowing as quickly as the data suggests from your perspective?
I think there is a certain softening going on in Europe. I don't tend to be a fan of taking very short-term data points and projecting a trend. I think we can definitely see some softening, and the outlook for the year from the major economic institutions is for a little bit of softening. And of course, that's part of what we see going on in the world. And we will just have to manage through that. But again, we focus on what we can do. We can focus on our operational plan, investing behind our brands, innovating, and working with our bottling partners to execute, to drive growth with our customers.
Mr. Quincey, we're getting headlines crossing the Bloomberg now that according to sources to Bloomberg, the US and China trade teams are far apart on reform demands. So a little bit less optimistic than we had possibly thought. Trump officials in Beijing this week will meet President Xi on Friday. Tell us about trade dynamics, how you're planning for what might be binary outcomes, and what a company the size of Coca-Cola is supposed to do in a situation like this.
Well, I mean, the number one impact of trade deals on us is typically indirect in the sense of how it affects aggregate consumer demand. Because in the end, while we're a global business, we're very local. So 95+% of what we sell in China is made in China, and similarly 95+% of what we sell in the US is made in the US. So it's not a heavy direct impact. But obviously, to the extent the deal improves or not consumer demand, that will affect us. Our view is that trade deals aren't perfect around the world. They can be improved, and we hope that they can find a path to improve the trade deals, because it's actually a win-win for everyone.
And finally, Mr. Quincey, you've talked about a $2 billion capex spend this year. Where will that be primarily? I
mean, our capex spend this year is partly influenced by the inclusion of Koster into our business, and actually the buying back of our Philippines bottler, along with a couple of other acquisitions. So part of it is because we've bought some things in. The other part is we've been undergoing an internal digitization process to update the internal system. So that is more of a temporary increase in spend that will become more normal in the years to come.